prices are falling. Traditionally, metals are seen as safe haven assets, especially in times of wars. But in this case, it is behaving unexpectedly. So is this volatility a risk or an opportunity in some way too? Joining us to decode and break this down and help you make sense of where your money should go in the short to medium term is Ruchir Gupta, financial and stock market expert. He joins us this morning. Good morning, Mr. Gupta. Hope you're doing well. Mr. Gupta, you've possibly been answering all these questions for the last few days, but I first want to start with the gold figures that we're picking up. Fourth week into the war, prices continue to drop. They've declined another 3%. This is typically not what happens in any conflict, right? We saw what happened in Russia, Ukraine. A lot of people started buying gold already. We saw prices skyrocketing, and that trend did not change until now, until the West Asia war happened. Why do you think that's happening? Take us through, the data, the technicality there.
Good morning, Christine. Now, what I am seeing is that that the time of Russia and Ukraine war, what happened is that Russia's forex reserves were freezed by US. So that $300 billion was freezed, and that time countries realized that our forex reserves are not in safe hands, and they started buying gold. So gold was the safest haven. And recently what has happened, BRICS countries, China, India, Russia, and all these were like giving a good combat to USD, and USD index was going down. Now what has happened recently is that we saw that Iran announced that we are not going to any way trade in USD. We want yuan, Chinese yuan. So this gives us a signal that there is some kind of conflict between India and China as well, and they are not at unanimous paths, because they were about to bring a currency unit which was backed by 40% gold. So all the countries were trying to take gold, have gold, possess gold. So that one thing has changed, one thing. Then so gold has been considered as a insurance against the inflation, insurance against the inflation.
Yeah.
So now what you have said is that slowly all these expenses are going to rise, and once this CPI index and all these WT indexes of inflation start to see the rise, the petrol rise is already coming, diesel has already risen, LPG cylinders are already rising, the prices are rising. So once that starts to reflect in the index of inflation, then people will realize that yes, we should have gold to at least hedge us against all this inflation. So that will the time when people will start to invest in gold.
Right now, because the US dollar is picking up, possibly is why we're seeing gold drop to this extent as well. So a lot of foreseeing is happening. What happens in the future? What happens to global markets? How do global economies react? So on and so forth. Ruchir, what I do want to understand, because a lot of us here are wondering, we've not started feeling the pinch as much yet. So for instance, if we're ordering something on e-commerce websites, we're not paying up extra delivery charge as yet. Maybe it's hiked by 2-3 rupees or 5 rupees in some places, but that number could keep going up. If there are no signs of de-escalation in West Asia, that number could keep growing up, and that's obviously given birth to a lot of worry, concern on what you should do with your money. And stocks is the biggest indicator, right? We've seen the markets in red, a lot of people jumping to withdrawing their SIPs. But experts say that's not the decision you need to make. Do not act impulsively. Why in the long term should you continue with your SIPs even in times of conflict?
One very good reason is that though the war is there, historically if we see, January to March is a very good time for correction in Nifty and all the equity markets. We can see that out of 10 events in the past, we have seen that 8 times the correction has happened. And then what happens is that from the end of March, there is a good rally for next 6 months around for September, and that also we can validate from the seasonality. Now, when this is happening, coupled with the war thing, we are seeing that is already a normal correction window, and the war is also happening. So we might get very good opportunities here. This is not the time to stop SIP.
So you're saying this could be a chance for a 100% recovery, let's say 8-9 months from now. So if you're in no hurry, or if you do have emergency funds or liquid funds, you do not need to really worry at the moment. Just pull out your money once you've made that 100% recovery, which is likely to happen in the long term, is what you're saying, Ruchir.
So the long-term recovery is anyway going to come. We have seen that whenever the wars end, the downside that has come as a result of war, that there is 28% recovery whenever the war ends, that we have seen in the history. So that is one thing. Then I have already shown the phenomenon of seasonality, which ends around March end. So from there the recovery can happen. One second thing. Third thing is that when we see gold versus M2 money supply, US has been printing a lot of money, lot of USDs, but in respect to that, gold is limited. So one indicator is M2 money versus gold. One that says that yes, gold is still cheaper, and because of this US conflict with Iran, a lot of money is going to be printed. So again, the gold looks cheaper versus USD. So one thing. Second thing is that Dow Jones to gold ratio is also there. So gold is at the lowest levels in comparison to Dow. So what this means is that equities are a bit expensive in relation to gold. So if I want to go for something, I will be going for gold, one thing. So this is second thing. Now third thing is that gold to silver ratio, this is around 66, which means that one coin of gold can buy 66 coins of silver. Now this is historically, if we see Coinage Act 1792, around 250 years back, that fixed gold to silver ratio at around 1:15. Now, based on current usage of silver is going on perishing. It is not being saved. So that ratio could have affected a lot. And recently, what has happened is countries have been even collecting silver as well, not just gold. So they are also considering silver as a asset to like a backup for USD. So once that happens, if the countries also officially start, officially that is not coming here, but the unit which was to be launched by BRICS countries was also collecting silver. So that is third thing. So if
the dollar is gaining, the rupee is falling, a lot of people are saying might as well invest in dollars. That's why possibly we're not seeing people also opt for gold at the moment. But then you have the price falling as well. So let's see how this plays out. Ruchir, what's interesting and what's also important at the moment, and I do want you to come in on this. Let's break down the story. For a family, let's say that is invested 10 lakh rupees. It's important that they put all their money in different baskets. So we're talking about SIPs, we're talking about FD, we're talking about some emergency fund, for instance. For the next 3-6 months, you should have certain money that you can spend on your basic necessities, and then you have obviously your gold, etc. How should a family with 10 lakh invested put this money in different baskets? If you could just, as an example, break this down for us so people can understand what they should do in times like these.
So in the times like this, 10 to 15% should be in gold, 10 to 15% could go in silver, then remaining could be maybe in equities if the person wants. Then some part should go into FDs and 15 to 30% based on the age of the person. Then in equities also, one thing is that people are chasing liquidity, and in liquidity they are paying for higher Ps. I am saying if you go for a lower PB ratio is price to book value, which means company has a higher valuation versus the price. If we go for that, there is a limited downside. One thing, don't go for higher debt to equity company. companies. So if the debt equity ratio is high for a company and the interest rates are going to rise, these companies will not be able to survive. So we should go for companies with lower debt to equity ratios, which means if you can look at these two things in any sector, in any stock, then that should be in your portfolio.
Is it any sector, any stock? Because a lot of experts are speaking of a few sectors that are very, very safe right now. Resilient, for instance, defense, FMCG, so on and so forth. Not likely to see the impact the next few months. So would you have tips for our viewers this morning?
Yes. So what I will say is that defense sector, yes, but that is a growth sector in current conditions because the country companies like HAL, Mazgaon Dock, and all those making the defense equipments or fighter planes or whatever, these companies are placed relatively at better valuation. The expectation we can see is that they are at a good valuation, not a cheaper valuation. But because the growth can come there, so people might be eyeing there. I have seen print media, I have seen textile companies, I have seen agri-based companies, I have seen some oil and gas-based companies. They are very, very cheap in terms of valuation when we see price to book value. So we can go to those traditional sectors and they are very relatively cheap, so the person should consider them versus the stocks or companies which are very relatively high. I will give some quotations, like a few government banks are there, like PNB, Union Bank, Bank of Baroda. These are also placed at lower PB ratio. Then few companies are there which are into print media. Their price to book value ratio is very high and they have got a lot of land banks. So all those things are still not monetized, still not at the face value, so not at the market value. So there could be a good upside.
Okay,
or at
so
least
there's an opportunity there. Great. Ruchir,
Yeah.
very quickly before we wrap up this conversation, because we're running out of time now. A lot of people say, so for emergency funds or you know, anybody who needs to look at the next 6 months of their expenditure, a lot of people have ended up, you know, pulling out from their SIPs, etc., for the very same reason. And the first most thing to do is to have some money at hand that you can spend, right? So before there is water shortage or your tap runs out, you already have water stored, is the basic logic that one must adhere to. Now, Ruchir, in that case, traditionally we've all heard of, oh, don't put too much money in your savings account. Safe. Should all of this be put in savings accounts?
see, if we is there any risk what you are highlighting to? Okay, so see, what strategy I used few months back is that a lot of rumors were there that banks could shut down, this could happen, that could happen. So what I was doing logically is that I took a coin, a 10 rupees coin, and I took its snap and put it into ChatGPT. And I asked, what is the notional value of this coin? It said some metal is there, which is a bit expensive and all those. So it said that maybe it is a 10 rupee, but the value is there for 5 rupees. I thought immediately that maybe I should have some kind of coins at my home if I am not able to take the money from the bank. One, then I had some silver utensils, some silver jewelry, or some silver coins I collected recently. So these could be the mode of exchange if something happens, like Iran threatened for this internet outage. In that condition, maybe people could not take their money out of bank. So in that condition, we can use these terms, these modes of exchanges. Then there should be, like, we should not worry. If you have the stocks, you can write what are the stocks that you have. The internet outage might go or whatever. You can.
I think that's a problem for later. I think we should all agree that's a problem for later, and possibly and hopefully, fingers crossed, on that, the situation will not deteriorate to that extent. Thank you so much, Ruchir. That's all the time we have.
One thing more, that if you are keeping your money in your saving account, the inflation is going to go up, means your money is going to deteriorate.
Exactly.
That should not happen. So you should hedge your money, buy maybe gold or silver, so that at least your money remains the same purchasing power.
Okay, lovely. Okay, we'll end this conversation on that very positive tip that you've shared with all our viewers. Thank you so much, Ruchir, for joining us this morning.